Euro dollar. So after several days of consolidation, the market has finally broken down, taking out key support at 12.65 to put the focus firmly back on the 11-year low from the 26th of January at 110.98. A break and close below 10.98 would confirm a lower top at 15.35 and open the next measured move downside extension towards 106.65. At this point, only back above 15.35 would compromise the immediate bearish outlook. Sterling dollar. So cable gains have finally stalled out after seeing a nice correction in this market over the past several days. The market is still confined to a broader downtrend, and a lower top could now be sought out by Thursday's high at 155.52 ahead of a bearish resumption. Look for the market to break back below recent support at 53.15 to strengthen this outlook and expose a retest of the 49.51 2015 low. Dollar yen. Dollar yen, still nothing going on here, with the market in the middle of a very well-defined range between 121.85, the 7-year high from December, and 115.55, the December 16th low. At this point, a break above or below is going to be required for clear directional bias or insight, but with the market locked within a more well-defined uptrend, a break to the upside is favored above 121.85 and towards 125 further up. As such, look for any setbacks to be very well supported by this previous triangle resistance in the 117 area. Euro Swiss. So Euro Swiss has broken up recently and extended the recovery off those historic lows from several weeks back, with the market trading up to 108.15 ahead of this latest setback. There is risk for additional declines over the coming sessions, but only back below 104.15 would compromise the current recovery outlook. Aussie dollar. So after showing a false break above some range highs at 78.76 earlier in the week, the market had put in a bearish outside day formation at 79.13 on Thursday to suggest that the lower top is now in place ahead of a bearish resumption back towards the recent multi-year low from the 3rd of February at 76.25. At this point, only back above 79.13 would delay this outlook and give reason for pause. Dollar CAD. So dollar CAD has been locked within a consolidation over the past several days, although the consolidation is certainly classified as a bullish consolidation, with the market recently breaking to fresh 5-year highs at 128. For now, the market should look for a higher low somewhere ahead of 123.50 in favor, or at 123.50 in favor of the next major upside extension through 128 and towards the 2009 peak at 30.65 further up. At this point, only back below 23.50 would delay the recovery outlook. It certainly wouldn't negate it, but it would delay the recovery outlook and suggest that a higher low could be sought out somewhere a little bit lower down ahead of 120. Kiwi dollar. So after rallying over the past several sessions to above 76, the market has finally stalled out by this previous critical support from 2014 at 76.09, slightly exceeding that on Thursday to reach 76.13 ahead of this latest minor pullback. A lower top, a medium-term lower top, is now sought out ahead of a bearish resumption back towards the 71.76 recent multi-year low, with a break back below the low from the 24th of February, which comes in at 74.20 to strengthen this outlook. SPX 500. So the S&P 500 has recently rallied up to fresh record highs at 2120 ahead of this latest minor pullback. But at this point, a break below the low from the 17th of February at 2083 would be required to take the immediate pressure off the top side and open the door for a more significant correction. Until then, scope exists for additional upside for fresh record highs towards next key psychological barriers at 2150. Gold. So although gold has seen an intense pullback since mid-January all the way down to the 1190 area this week, the pullback is still classified as corrective, with the market recovering out from the 2014 multi-year low at 1131. A fresh higher low is now sought out at 1190, the current weekly low, ahead of a bullish resumption back above the high that we saw on the 22nd of January at 1307, 1308, and towards 1345 further up. Only back below 1190 would compromise this outlook. That's all for now.